Hello, fellow traders. 'Tis I, the rumpled one. It is Tuesday, May the 28th, the year 2019. Let's talk trading. What's on your chart? You know, life is funny, but I guess sometimes, you know, people might think they're ahead of you when in reality, you're coming up to lap them. Why do I mention that? I just saw today somebody else in their little trading newsletter that they put out talking about opening ranges. And it's funny because this isn't the first time that I've, mentioned a subject, and then about a week or so later, they come out with it. I don't own, the copyright or the trademark, or I wasn't the creator of the idea opening range. I just kind of find it interesting that, after I mention something, then other people start mentioning it. Perhaps they mentioned it a year ago and they think, that I'm copying off of them, but it doesn't matter. The point being is, see, there's just so many um ways to trade, but some of them have been proven, you know, over the years, over the decades, over the centuries for that matter, long before, there was online trading, with, the opening range breakout being one of them. Something else that's been proven for a long time is money and risk management. So as we're closing out this month here this week, have to make sure you've got your money and risk management in place. And a lot of people struggle with the money management. The risk management side, this is really simple. Maybe I might even need to do a separate screen on the money management because so many people don't know when to take profit. And part of that is the FOMO, fear of missing out, because they figure if they exit the trade, then it's going to go in their favor. And, the one or two times that happens, I guess stung so much, it's just burned in their brain and they can't let it go. And they don't remember all the times where they exited with a, handful of pips and then price went the other way and they were happy about it. It's, taken 10 pips only to see it go up another 60. Those are the ones that really, really get to you. But you can't let that happen. It has to be steady as she goes. You just keep with your plan over and over, and you're going to miss some whoppers every now and then. That's just trading. And those are like the fish stories. You can tell about the one that got away, right? But in the meantime, you're stacking up your victories, your little, daily profits, um, and they amount to a lot more than that one that got away. I mean, think if you had 25 pip trades, that's 100 pips. And so if you miss out on a 70, what would you rather have, 70 or 100? Think about that, and you might see there might be a method to my madness, right? Well, yeah, there's a few methods. One of them is trading that weekly open gap, and you can see it's all filled. Um, Now, the euro yen has definitely done a little turnaround here. As you can see, we are now red for the week, and it's just Tuesday. The price has already turned on us. It almost got to the upper weekly wick zone, but not quite. Now we're in the lower weekly wick zone. So the trigger long is right at the 50 line. And for those of you just tuning in, if you wonder why, or maybe you've tuned in for, a couple of weeks, you wonder why I just do the euro yen. It's so I can show people that I'm not cherry picking where one day everything looks good on the pound dollar, and then the next day everything looks good on the dollar yen, and the next day it looks great on dollar Canadian. And so, no, I'm not sure. I stick with the same thing. So you can see how these trades work when there's lots of volatility, when there's average volatility, when there's low volatility. You can see that these methods work day after day after day. And right now, as you can see here, we're red year, month, week, and day. Totally red. And we went up, hit the previous day's midpoint, crossed over a little bit, and then came right back down. So the daily midpoint crossover, if you get the trade, you can see it's profitable. You see, some days you don't get that trade. But the other days, if you take that midpoint crossover, now here's one, this may have been a loss. I'm not sure. Let's see. The mid dots was at 125.19. What was the high? No, that's the wrong one. What was the high here? 125.20. Okay, so there was maybe 2 pips. So that was either a scratch trade or a stop loss. But if you were actively trading, if you stopped out here and then you picked up here on this exiting that lower wick zone, you should have more than made up whatever it is you lost. So that's why you have a couple of methods at your disposal. Just take advantage of the price action as it's happening. And you can see here, talking about price action as it's happening, we had yesterday, this is the opening range for the week. You see price started inside the range, went up, and now crossed below. And you can see here we had a 46, we're 19, about 27 pips to the downside here. Let's see, what is that low? Will it tell me? Yeah. So yeah, from 50 to 20, that was 30 pips. So there was 30 pips to be had taking that one trade. Not too bad on a simple breakout move. Now, if you notice one other thing, which we should probably notice quickly, so I'll just leave it here, little teaser here. What do you notice about this trade? Okay, it's the first day of the week. And we're still below all the opens. And we're still below all the opening ranges. Now, the answer is yesterday was an inside bar, and the previous day was an inside bar. So we had 2 inside bars in a row, and you can see here, once again, there were pips to be had. And the blues are all the current inside bars, and the grays are ones inside bars 2 or more days ago, but price is inside that range, so you can look to take those breakouts. Range is only 49 pips. No range over 100. So it's the day after Memorial Day. I don't know, but it just doesn't seem to be that much action. Once again, all the more reason to take those 5-10 pip trades when you get them. And the holo, you see here, we had the weekly H1 lowest open was put in. And you got a second opportunity to get some. You see the H1 highest open was put in here, and that was a nice trade. So once again, the holo trades happening every day. And you can see here profits to be had. But just remember, as you're watching these videos, that these videos are for educational purposes only, and your results may differ from mine. I guess you're supposed to seek professional help in the financial field because investing can be risky. Forex investing can be risky. Buy zone. The pivot point was just above the buy zone. No real bias once again, but just taking the trades as you see right here. We had a weekly open crossover, so you could have jumped in early here. There was a buy zone trigger. There was some profit to be made. You had a short zone. There was some profit to be made there, or a scratch. If you stayed in that trade and you came here, that's telling you to just scratch. I mean, you don't, thing is, you can say, yeah, well, that's hindsight. Well, how do you know? Well, you can tell. Is price moving? Does it stall? Is it just wavering? If it's not moving in your direction, chances are it's moving against you. Here you go. You had another little trigger, failed to make a new low at the time, came back here, cut across this low. So that should have been a scratch trade. Then you had another reentry. This is where you made the money. Another time here you could make more money. And see, these prices went into the zone, but you'd be trading against the green candle color, which is a no-no. And here you triggered in, and then you had a chance to take some profit, because you can see here it didn't make a new high, and then price came and it was then right through those into that wick zone. It's just telling you, take the money and run. So just look to the wicks and you can read the price action. You know, I think I mentioned yesterday about these shortcuts to trading, and there just aren't any. You just have to learn the fundamentals and then apply them and just keep doing them over and over again. And you can see here we do have an active rat zone. There's a gap, 9 pips, not much, but you can see in and out of the rat zone. And we're going to, right now, we've got another rat zone trade lining up. Pivot, we took it out. Looks like we hit the weekly pivot on Monday right there, and price reversed off. Daily pivot, we took it out. So you see we still have 3 missed pivots for the month. So we've got about three days left this week to take out these pivots. We're a couple hundred pips away. Might look like they might stay open a little while longer. Price action, 2 ball at the top, red at the line, pro trade, and you can see what happened next. And the wick zones, we know, oh, it doesn't look like there was a lower wick zone. Which is, I have to double check something here. That's interesting. Yeah, there was hardly, there was just a tiny lower wick zone, because you can see here, yesterday was practically a doji. So really, there was almost no wick zone. So, but still, no, there wasn't 2 wick zones. It's basically one. The whole candle was a wick zone. So you can see here, in and out, in and out. And price trading at the lines, previous day's open, previous day's low. Nice movement, nice trades, nothing difficult. You can see here we have some downside movement, the ask, cross below the peak of the bid, and it's come down. I wanted to show you something here, but I'm running out of time, so maybe we'll do it tomorrow. Instead, looking at the range, say 49 pips today. Looking at the Einstein line, as you can see here, not much to be had. Just take a few pips here and there. So that's it, fellow traders. So hopefully come back tomorrow, and if you haven't, come down here, hit the subscribe button, hit the bell, and just remember, it's not what you trade, It's how you trade it. So go out there and drain the banks.